Hello there, and welcome to our rescheduled webinar on charities and VAT. My name is Tracey Bird and I run the SCVO Information Service, and thanks to you all for joining us today. Just to note that this webinar is being recorded and will be available later on the SCVO website. Also, we'll send out any slides and additional resources to you all after this webinar by email. So working on the information service, I know myself that VAT can be a bit of a minefield. So I'm delighted that we have with us today Scott Craig, who is a partner and head of VAT at Azets. Azets provides support to SCVO's VAT and tax advice service, which entitles SCVO members with an income of less than £500,000 to free advice. As I say, glad that Scott's with us today. So I will hand over to Scott now. And I would say, if you have any questions, do put them in the Q&A and any comments in the chat. And Scott will do his presentations and we'll maybe ask questions as we go or at the end as well. So over to you, Scott. Thank you.
Thank you very much. Yes, good afternoon, everybody, and thank you again for taking time to join us. And apologies for anybody who was hoping to do it on Monday and it didn't quite work. So apologies for that. But fingers crossed, technology and a fair wind will get us through today. Let me just start sharing my screen and my presentation with you, if that's okay. And he looks for his presentation. Apologies, that's not what we want. I think that's us there. Can I just have a thumbs up that we can see that now, if that's possible?
I'm not seeing that at the moment, Scott.
Okay, apologies. Let me just get back into that. Go out of that. Let me try that once more.
That's it now there. We've got that now. Thanks, Scott.
You've got it now. That's good. Right. Okay. So happy days. Right. So let's go. Today was billed as, hold on. I'm now having trouble here with my side of it all. Is that working now, Tracey? Can you see that working?
I can see, yeah. Yes.
Here we go. Here we go.
Got your name and everything there now.
Success. Yeah. We're all good. Right. Apologies for that.
You see, I always say, who said VAT was easy?
I wish it was only 20% without technology, but here we go. Right. We're on our way now. So yeah, today we plan to cover some common VAT issues, areas really that confuse a lot of charities, areas that result in them incurring unnecessary VAT or admin costs, and also having doubt over perhaps their existing VAT position, what they should be doing, and whether they're open to question or challenge by each MRC. There are obviously other areas I'll maybe touch on the way through that could warrant and merit their own session, but we're going to concentrate on the following points. We're going to concentrate on registration, pros and cons of registration, what sort of things are exempt from VAT, because there is lots of discussions over things that are exempt from a tax point of view. Things that are exempt from a VAT point of view are slightly different, but definitely worth bearing in mind. And as a natural progression, if things are exempt from VAT, they affect the recovery of VAT. So we're going to talk about recovery of VAT, how you can look to maximize or improve your recovery of VAT wherever you can, and also finish off with savings that are available for charities. So those are areas that will avoid you paying or allow you to recover more VAT at the end of the day. So quite a few different areas, different topics in their own right, but they all link together as part of one kind of story and one sort of journey. So let me start on the first one. Registration. So for any charity that is already registered, you'll know the script, or you should know the script. For organizations that aren't, the key thing is that you need to work out and keep an eye on the value of your taxable business income. So if the value of your taxable business income, those are activities or income sources that's liable to the standard rate of VAT or the 5% rate of VAT or the 0 rate of VAT, if those exceed £85,000 in the last 12-month period, that's a rolling 12-month period, or if looking ahead in the next 30 days, you know that they're going to exceed the £85,000 mark, then you've got to notify HMRC that you've got a legal statutory requirement to register for VAT. You've no option at all. You've got to register. You should really register or notify HMRC within 30 days. Certainly, if you're looking backwards on your 12-month period, you've got 30 days to notify HMRC. So, for example, if you found that over the last 12 months you exceeded the VAT registration threshold in August, you would have until the end of September to notify HMRC, and you would then be registered from the 1st of October. Now, that essentially means you get 1 month VAT free, and you can trade to your heart's content without having to worry about VAT. But from the start of October, in my example, you would need to register an account for VAT. So it gives you a month to get your house in order. If, however, you're looking forward and you're saying, well, in the next 30 days, I'm expecting to get a huge amount of income from the sale of something, or new sources of income, or perhaps some sort of kind of funding that you're receiving that's VATable, then you need to notify HMRC still within 30 days, but you would be registered from day one. And so, for example, in that scenario, if you know at the beginning of August that you're going to exceed the registration threshold in the next 30 days, you would notify HMRC and you would be registered from the 1st of August. And that would then mean that the income that you're expecting to receive would be caught. So I think the message here is that if you're not already registered, work out what activities you have that could be or should be liable to VAT once you are registerable, and keep an eye on the income that you're receiving from those activities. Once you do exceed the VAT registration threshold of 85,000, you will need to register for VAT. If you don't exceed the registration threshold, there's no statutory requirement to register for VAT. You can continue to trade and to operate as you are. Some people, some people who I have heard in charity circles being called foolish people, but some people automatically decide, well, we want to voluntarily register for VAT. We want to be registered, even though our turnover is below the £85,000 threshold. Why, you may ask? Well, normally it's because they want to try and recover the VAT they incur in expenditure. The one major benefit of being registered is that the ability to recover VAT on expenditure. And we'll obviously cover that. When it comes to charitable organisations, it's not so much of an out-and-out benefit as you would perhaps think. So registration, if it's statutory, you don't really have much of a call on it. If it's voluntary, it's up to you. You probably want to register if you can recover VAT or if you want to recover VAT. But just thinking about the pros and cons of registration.
Can I just ask, Scott, before you move on, there's a couple of questions.
Yeah,
so,
sure.
If the amount exceeded the limit, say this 85,000, but it was just a one-off, you still need to register, yeah?
Well, you still need to notify HMRC that you went over the limit. But at that point, you can ask for, if it's a genuine one-off and you don't want to continue to be registered, you can ask for what they call an exception from registration. So basically, in that case, you still need to notify that you've gone over the limit, but you can tick a box on the application form that says it's a one-off and that you don't want to be registered and you don't want to continue to register. So it's a kind of a first strike registration, if you want to call it, and
Right.
you wouldn't be registered. Now, the catch to that is that if you subsequently exceeded the 85,000 in the preceding 12-month period, you would be registerable from the day you should have originally gone over. So just, again, you've got to be absolutely sure that if you think it's a one-off, that you definitely won't go over in the next 12 months, because that's what you're signing up to. And if you fail that condition or that agreement, they'll register you from the earlier date.
And if you don't register, you get caught out. Do you get fined or anything like
Yeah,
that?
yeah, no, absolutely. If you don't register at the correct time, so if you voluntarily registered, it's up to you when you want to register. But if you've got a statutory requirement to register and you don't do it within the correct time frame and at the correct time, there are penalties for failing to register. Now, basically, the penalty is based on the net amount of VAT due to HMRC. So when they work it out, what they say is, well, for example, say you were due to pay £20,000 of VAT to HMRC and you got to claim back 10,000, then they'd base the late registration penalty on the £10,000 net position. And if you end up being in a repayment position, there's a flat £50 fine. But if you go over that repayment and you're in a payment situation, it will be based on a sliding scale depending on how late you were, and it's all, you know, like 1%, 2%. It goes up on that kind of scale.
Okay.
So yeah, I mean, you need to keep an eye on it. A, because it's a statutory requirement, but B, there are penalties if you don't get it right.
Okay, and there's just one more question before we move on from Stephen McCluskey. He's
Mhm.
asking, what falls under taxable business turnover? Is that just money coming in, or?
Yeah, so any income that you receive, there are a few quirks which I'll come on to, but normally any income that you're receiving, so any payment that you receive, sales basically that you receive income for, equally invoices that you issue. So if you haven't received the income, but you have issued an invoice, the date of the invoice would be the date that income is recognized for VAT purposes. Now, the other things to bear in mind, because there are a few other things that often come into the equation, barter transactions. So that's usually where people don't pay. They might just kind of trade goods for goods or services for goods, whatever. Those are treated in exactly the same way as a kind of a financial transaction. So if you're supplying something and receiving goods or services in return, no cash, you still have to include that supply within your turnover as a taxable supply. And the other one, which is a little bit weird, but it's just the way it works, is that if you receive or if you pay expenses to overseas suppliers, so say, for example, you were buying services in from an overseas lawyer or an overseas accountant for whatever reason, they wouldn't be charging any UK VAT on their supply. But because it's an imported service, it's subject to something called reverse charges, and you need to count that as your supply and a supply to you. And because of that mechanism, you need to count that in as well. So essentially, it's the supplies that you make, whether that be via payments, if it's cash, or invoices that you issue, barter transactions, and also purchases that you've made, just purchase of services from overseas. All of those go into taxable turnover.
Right. There's a few more questions, but do you want to move on and we'll do them at the end? How do you want to do this?
Yeah, well, why don't we kind of skip through the pros and cons of registration, and then we'll maybe pause at that point and you can ask some more questions, and then we'll fly on from there. Okay, good.
Okay.
So pros and cons of VAT registration. The pros, as I said before, are that you can recover the VAT that you incur in expenditure. However, and this is the big however, is that the VAT that you incur in expenditure that's linked to or associated with exempt or non-business activities. So non-business activities would be free of charge activities that you perform, or exempt activities. I'll explain what exempt activities are in just in a second. But if you incur expenditure on those activities or income, you cannot recover the VAT. So 9 times out of 10, charities have either exempt or non-business activities. And that therefore means that they cannot recover all of the VAT that they incur in expenditure. And that's a given. You know, if you're a charity and you are incurring VAT, you should be able to recover some VAT, but maybe not at all. And that then means that the pros or the benefits of registration for charities aren't quite as high as for a normal business. If you do charge VAT on the supplies that you make, you can get cash flow advantages. I'm not convinced that that's such a big thing, to be honest with you, because you're going to have to pay over that VAT within a VAT period. So you're only ever going to get 3 months of a benefit. there's the old fashioned, the old kind of bank manager's comment that if you're VAT registered, more people will want to work with you, and it creates a very good first impression. I'm not convinced these days that people are so bothered about whether you're registered or not, but these are kind of muted as good things and positive things from the world of VAT. Dare I say, if those are the only good things, then perhaps it's not as good as we first thought in the first place. And moving on, the cons, the downside is that obviously once you are VAT registered, you're going to have to charge VAT on your goods or on your services. That pushes the price up if you add the VAT to the price. And that may mean that some of your customers who are maybe tight on cash and can't afford to pay extra won't use you. They might go to non-VAT registered suppliers. So it could ultimately cost you a little bit more to competition if the competition aren't charging VAT. So the price is going to be affected. Otherwise, if you don't up your prices when you have to charge VAT, you're going to end up getting less, or your profits are going to be less on the income you do generate. There's increased administration. You've obviously got VAT returns to complete. You've got compliance to kind of adhere to, and you need to make sure that if HMRC come along, that you can explain, and you've got all the paperwork and the evidence that they will require. So yes, admin is usually a bit of a kind of a headache for most charities, and that's why a lot of charities don't like the idea of VAT registration. There's also linked into that, there can also be unexpected costs. So you may, God forbid, have to employ someone like myself to help you out with things. And although we're cheaper than lawyers, we're not that cheap at the end of the day. Let's put that out there. So you might have to kind of engage someone to help you out. There is also, as we mentioned before, if you get it wrong, there could be penalties, unbudgeted costs, and interest charges for making mistakes. So I suppose the unexpected costs would be there anyway if you had to register for VAT, and that's one of them. But beyond that, I mean, the administration costs and the hassle factor of having to complete VAT returns once every quarter, and the hassle of having HMRC looking at your books and records is probably the cons that put most charities off registration. That was kind of what I was going to cover with the pros and cons. I was going to start to talk about exempt activities now. Tracey, do you want to, if there's any more on registration, do you want to cover them just now?
Yeah, just bear with me. So Wendy asked, will HMRC let you voluntary register if you have little or no taxable income? I think, did we cover that one really?
Well, the answer is yes. As long as you can show you've got a clear intention to make VATable supplies, you can register. And I mean, the classic example of that is the Christmas tree farmer. I mean, we've genuinely had a Christmas tree farmer as a client who planted a whole load of trees in year one and had to wait 15 years until he could harvest them. So with that, in that case, he registered for VAT because he was incurring VAT on expenditure, and he registered voluntarily, and then he was able to recover all the VAT incurred in costs. And at the time, HMRC just needed some evidence, some proof that he was genuinely in business, he was going to make VATable supplies, and he had incurred expenditure. So it's maybe not without a fight or without a push against a kind of a semi-closed door. But if you want to register and you've got a genuine business reason, a genuine business intention, you want to recover the VAT on expenditure, you should be able to register.
So in that 15 years time when he had his trees, could he not recover all that VAT from 15 years before had he not registered?
No, because when you register, you can go back for 4 years on any goods that you've bought and recover the VAT on goods in the period 4 years prior to registration. And if it's services, you can only go back for 6 months. So it's quite interesting. If, for example, if a lot of clients maybe construct something, maybe construct a building, and they want to recover the VAT on the construction of a building. So commercial premises would be a really good example, that they'll charge VAT in the commercial let, and they'll incur VAT on the construction of the property. Now, if they were to wait until the building had been completed and it took a year to complete, they could only go back for 6 months on services. So all of the building services that they receive, that they incur VAT on, you wouldn't be able to recover all the VAT from day one. So in that scenario, you want to register from day one. You wouldn't be charging any VAT until it's open and you actually get rental and tenants in the door, but you are then allowed to recover all the VAT that you incur on expenses, a positive cash flow, if you will.
Right, okay.
Okay.
And does the income that you're getting in for VAT, does that include grants from the government? Because Catriona, she gets all income from government, so
Okay.
does she need to register for
So as long as the grants are genuine grants, they will be outside the scope of VAT, because the grants that you're receiving aren't for any specific or measurable supply in return. There may be conditions associated with grant funding. You may have to use it in a certain way for certain things, but unless you've entered into a service contract or a service level agreement and you're being paid under contract with the council or the government department, it's not going to be a supply. It would have to be subject to some sort of procurement process for it to be a supply. So if it's just a grant, a genuine grant, it's outside the scope of VAT. You do not have to consider it when it comes to registration. If, however, you have your services have been procured and you're providing services to a local authority under contract, then that income needs to be considered when you're thinking about registration, because it would be liable to VAT normally if you were registered.
Right, okay.
Okay, so with grants, the key there is to just double check that it's genuinely a grant. If you've any doubt over it, use the helpline, give us a phone, and we'll be able to sort you out.
Okay, great.
Okay.
And still more questions? Is it only sales income that's taxable? What about donations and funding money? So you sort of like, well, donations, are they the same as grants?
Donations are the same as grants. So yes, someone gives you a cash donation or a donation, then they're not expecting to get anything back in return. So there is payment, but there's no supply, therefore no VAT. There's a really in the holy grail of VAT, there is a formula. So if you've got any question over this at all, if you're receiving income, the only time you have to think about it from a VAT point of view is if you can say, well, I'm supplying something in return for that. So I'm making a supply of goods or services and I'm being paid to provide those goods or services. You've then got something that you need to think about VAT on. If someone gives you cash and money and they're not expecting, like a donation, they're not expecting you to give them anything in return. Therefore, you've received the payment, but you're not making a supply, so no VAT. Exactly the same with grants. What was the other one you mentioned there?
Donations. I think it was grant funding as well. Yeah.
Yeah, so grant funding. Yeah. So I mean,
Money, yeah.
I think the one that might catch people out is where you've got charity shop sales. So you'll be given articles and items that you will sell in your shop, and you'll sell for charitable purposes. Now, the sale of donated goods isn't liable to VAT, but it's actually zero rated. So if you've got a shop, if you've got a charity shop and you're selling goods through the shop, all of the income that you generate through the shop, I would expect to be zero rated, but that counts towards the registration limit. So, and similarly, as we'll go on to talk about with VAT recovery, if you have a shop and you've got expenditure that relates to the shop, you should be able to recover all of that VAT, notwithstanding the fact that you might have some sort of exempt fundraising income from somewhere else. If you've got a shop, the shop costs should be fully recoverable.
All right. Last question, then I'll let you move on. When you say that non-business expenditure is not recoverable, how does this impact charitable activities that are the main activity, but commercial activity is to support funding them?
Okay, so when I'm talking about non-business activities, I'm talking about things that you do completely free of charge, absolutely free of charge. So if you have charitable activities, for example, you might run a shop or a cafe as part of your charitable activities. They still generate income from a VAT point of view. You might have a fundraising event, which is for charitable purposes. It will generate income. So essentially, it's not completely free of charge. But if you have, let's say, a drop-in centre, or if you do an education programme in the community and you're not charging anybody for that at all, that's free of charge, that's non-business. And what HMRC say is that, and what the rules all say is that if you've got those non-business activities, when we come on to talk about VAT recovery, I'll explain it in a bit more detail, but basically the VAT that you incur on expenditure related to those free activities, you cannot get back. And similarly, an element of VAT on general overheads is not recoverable. And again, I'll talk about VAT recovery calculations in a wee while, but the bottom line is free of charge or exempt activities, you are not allowed to recover the VAT that's incurred on associated costs.
Right. Okay, thank
Hopefully
you.
that
I'll
makes
let
sense.
you move on now.
Okay, so we touched on exempt activities and things that that you can't, when you incur costs, you can't recover the VAT on. And this is a list of the sort of things that we're looking at. So insurance, provision of insurance, provision of financial services. Normally, they wouldn't, those sorts of, that sort of income wouldn't apply to charities. However, just be careful. If you receive commission from maybe being an intermediary, maybe putting people in touch with insurers or banks or kind of financial institutions, and you get commission income, that could be seen as being exempt. So just be careful on that one. Provision of education, provision of healthcare, welfare and burial cremation, and the admissions to cultural events are all exempt, and they're all pretty common within the charity field, and they're all subject to pretty similar conditions. For these supplies to be exempt, they have to be performed by charitable type bodies. The bodies shouldn't be using the profits from these activities for anything but these activities. And there's a couple of others, like the education needs to be a certain type of education, the admissions needs to be a certain type of event, and the healthcare and welfare needs to be provided to a certain type of people with a certain type of purpose. So there's conditions on each of those lines. But if you've got educational income, if you've got care welfare income, if you've got admissions to cultural events, you need to think about whether your income is exempt from VAT or not. And again, we've done quite a lot of work with organisations. Some organisations wanted the income to be exempt, so we've worked with them to secure that. We've worked with other organisations who didn't want it to be exempt, normally because, for example, they were building a theatre or they were spending a lot of money on a school, and they wanted to be able to recover the VAT that they incurred, so they wanted to charge VAT on their income. So we were able to work with them to make sure it works. As you can gather from what I'm saying, the conditions apply in certain cases, but equally the conditions can be, I say manipulated, I don't mean that in a bad way. The conditions can be set so that they don't apply as well. There is an element of choice there. And the final one I've got there on exempt supplies is pretty common, land and property transactions. So the rental, the sale of commercial, residential and charitable properties will normally be exempt. There are a few exceptions. So the sale of brand new dwellings or the sale of brand new commercial property isn't exempt from VAT. And similarly, the rental or sale of commercial property, the starting point is that it's exempt from VAT. However, if you don't want it to be exempt from VAT, you can elect to charge VAT on those supplies. It's unusual. It's kind of it's not the starting point, but we're seeing it more and more in the property sector. And the rationale behind it is that people who own the property, people who undertake property works and incur costs on property want to be able to recover their VAT, and that's why they're electing to charge VAT on commercial properties. As a charity, one of the things you can do is, if you're looking at renting office space and someone says we're going to charge you VAT on this property, you can show a charity card and say, well, hold on, we're a charity, we use this for non-business purposes, back to free of charge activities, and therefore we don't want to pay VAT. You will have a debate with them, you'll have a discussion with them, but at least you've got an opportunity of either negotiating a lower price or avoiding VAT on the rental charges. So that those activities are exempt. And if you've got those activities and you've got income from those activities, you don't have to worry about registration because they're ignored for registration purposes. But if you are registered, they will affect your VAT recovery. Okay, so we'll move on. And as far as recovery of VAT is concerned, here are the basic supplies. So I've got a nice picture coming up. So let's wash over you and I'll show you a nice picture in a minute. So if you've got, the key to this is that the recovery of VAT really depends on how the expenditure is used. If the expenditure is used and is linked to taxable supplies, so that those are supplies that are liable to the 0, the 5 and the 20% rates of VAT, you can claim 100% of the VAT that you incur on those expenses. If you've got, as I said before, if you've got expenses that are linked to exempt supplies, there is no recovery, but there's something called the de minimis limit. I'll come on to that in a wee second. It's your last gasp, your last chance at VAT recovery. Then you've got supplies that are outside the scope, non-business, free, just as I've been talking about. You cannot recover the VAT on costs associated with those activities. And then finally, if your expense isn't wholly linked to any of the aforementioned, it's going to be what we call kind of general expenditure, pot expenditure, residual. There's many names to it, but just it basically means that the expenditure is linked to all of the above activities. And in that case, you are allowed to recover some of the VAT, but only a percentage of it. So I'll come on to talk about how you recover VAT in a second. Remember, I mentioned before about overseas services, you buying in overseas services. So that purchase is also is recorded as being a sale, and it counts towards your VATable turnover for registration purposes. But you also need to think about those services when it comes to VAT recovery, because the VAT you charge yourself, you can claim back. Again, if you think you're affected by this and you want to discuss it in a bit more detail, use the helpline. We'll have a chat about it specifically. The other thing I'll mention is if you're incurring VAT on capital expenditures. When I say capital, I mean property essentially valued at £250,000 or more, or construction or renovation works in property, which is £250,000 or more. Now, if you incur those costs, you are allowed to recover the VAT according to these rules, according to your normal recovery. But, and this is the big but, and this is the admin hassle, you must monitor the use of the building for 10 years. And if your exempt use or your VATable use, so if your exempt use increases, you've got to pay back some VAT to HMRC. If your taxable activity increases, you can claim more money back from HMRC. So let me give you an example. If someone was to incur, I don't know, £200,000 worth of VAT on property, buying a property, and they could only recover half of it at the beginning, that assumes that they've got 50% exempt activities within that building. If their exempt activities went up to 60% in years 2 or 3 or 4 or whatever, they would have to pay back some money to HMRC. If, however, their VATable activities went up, they could claim more back. So at the end of the 10 years, the initial recovery is, I guess, adjusted to make sure that you've taken account of the proper use of the building over the 10-year period. So there's winners and losers in that, but well worth bearing in mind with capital works. So that's that one. This is the pretty diagram. So if you can imagine, you've just incurred a purchase invoice, you've got VAT on it. The first question is, does it relate to taxable supplies only? If yes, it's green for go, you recover the whole lot. If it's relating to exempt or non-business, stop, you can't recover anything. And if it relates to all of the above, taxable, exempt and non-business activities, you can recover an element of it back, but you need to apportion it. You need to make a calculation. This is the starting point of calculations. so once you've kind of looked at the costs and what they call directly attributed it, anything that's left in the pot or left to be kind of split gets split according to the starting point is the standard method, and the standard method is based on income. So what we look at is, and the formula is there, the recoverable element of VAT on your expenditure is calculated by taking taxable supplies, that's VATable supplies, over VATable and exempt or total supplies. Things like grants can normally be excluded. Things like donations can normally be excluded. One-off transactions like property transactions, they're excluded. And any sale of capital items would be excluded as well. So that gives you a percentage. That gives you the percentage that you would be allowed to recover from that last pot of expenditure. And once you've calculated that, you've got, you can use that as an average for the rest of the year. But what you've got to remember is that at the end of each VAT year, which is kind of obviously 4 periods, usually ending in March, April, or May, depending on VAT returns, you need to average out the whole of the last year and kind of work out what the average is and make adjustments accordingly. There's really good kind of historic stories of golf clubs. Golf clubs obviously receive exempt membership income, and they always receive the exempt membership income around about December or January. So in the old days, the golf clubs would never buy a tractor in January or February because they would be incurring a huge amount of VAT at a period where they couldn't recover any VAT at all because their exempt activities were so high. And what they would normally do is wait until the summer, when lots of visitors would come in and spend lots of money in the bar and in the cafe or the restaurant, and their taxable supplies would be quite high. And then they would recover, then they would buy the tractor and recover as much VAT as they possibly could. And that was great. There was a lovely little cash flow advantage for them. But at the end of the year, March, April, or May, they had to average everything out. And normally they would have to pay something back because their recovery over the year was less than the period that they had recovered the VAT and the tractor in. So it's a similar thing for any other charity, that if you've got a similar expense, you could look at trying to be really smart and incur the cost at a time where you're able to recover a lot more VAT. But remember, you're going to have to average it for the year so that there will be a little bit of payback. Similarly, if you've incurred VAT on a significant cost or significant cost through the year and your recovery's been low, don't fret, because at the end of the year, the average is taken and you might get a little bit of a windfall at the end there. So yeah, the standard method is the starting point. I think what to kind of also bear in mind is if you look at the income-based calculation, if you think that that doesn't reflect the use of the expenditure at all, then you can ask for and apply for a special method to be used. Now, special methods can only be used if HMRC have given their advance blessing or their advance approval. You can't just use it because you feel like using it. They've got to approve it, they've got to go for it. And the two-stage process is to get them to accept that the standard income-based method isn't fair and reasonable, doesn't reflect the use of expenditure, and the method you've got or you want to use is far more accurate. A good example I've got of that of late was I have a client who provides property management services, all VATable property management services, but they also sell insurance, so that property insurance. They don't incur any expenditure at all on the property insurance. All they do is kind of send an email to an insurance company who take it from there. But they get maybe about 50% of their income comes from insurance referral income. Significant amount. They're doing really well out of it. But that then means that because they've got exempt income, they're partially exempt. And if they were to use the standard income-based calculation, they could only recover 50% of the VAT they incurred. Now, the VAT they incur is on property refurbishment expenses, which are all VATable services. So we wrote to HMRC, we appealed against the use of the standard method, and HMRC said, great, we agree. We came up with a formula that we used, and but as luck would have it, as I'm going to mention before, just in a minute, the VAT that they ended up having to block was below de minimis limits. So they ended up getting 100% VAT recovery for the period rather than 50%. So, you know, with a little bit of discussion and a little bit of negotiation, it's amazing what you can get. The sort of things that the HMRC would expect or accept as being a special method would be things like expenditure-based calculations. If you've got a visitor or admissions, perhaps that, staff, but only if it's staff time, you need to keep timesheets anyway. You can't just do it for VAT purposes. And floor space and expenditure are probably the most common ways of apportioning from a special method point of view. So that's that. The minimus test, I mentioned this before. So once you've calculated the amount of VAT you cannot recover, if you find that it's less than £7,500 for a year, and is less than 50% of all the VAT that you've incurred on expenditure, you can get it back. That's the default. It's you know, once you've worked that out, below 7.5, below 50%, you get the postcode lottery for VAT. You get the money back. Okay, so annual adjustment, as I said, you need to perform an annual adjustment at the end of each VAT year. The payment, there'll be a payment tour from HMRC. What's interesting, the reason I kind of mention this is that in this current year, obviously activities and income have been all over, it's been all over the shop because of COVID. Some people have found that their exempt activities have just completely disappeared, and all they've got are VATable activities. So they've gone from, you know, not being able to recover everything to actually being able to recover far more, and sometimes 100% of their VAT. In other situations, because maybe shop sales are down or shops have had to close, there's no VATable income. So therefore their exempt income has gone up. Now HMRC said that because of COVID and because of the impact that COVID had on activities and business, they recognised it. And what they said was that, bear with me, what they said was that within business before 2021, they've asked people the blunt question: does your partial exemption calculation still provide a fair and reasonable result? And if you think it doesn't, you're within your rights to go back and ask them. There's a special helpline that you can use. You can come to us, we'll kind of point you in the right direction. But you can go back to them and say, look, this is unfair. We got 50% recovery. Now we're at 10%. It's because of X, Y, Z. It doesn't reflect the use of the expenditure really, because we've still been trying to make shop sales. It's just, it's not been possible. And in those scenarios, you can go back for 3 years and work out the average and then apply the average, but you need HMRC blessing on it. The other side of the coin that we've seen is that clients have been able to recover far more than they originally would have. Now, if the difference between what you should have recovered and normally and what you have recovered because of post-COVID or because of COVID restrictions is more than £50,000. Okay, so say you recovered 30,000 last year and you're looking to recover 90,000 this year, difference of 60, more than 50, you need to just do a little bit of calculations and a little bit of checking. There is something called an override calculation that HMRC might want to apply. So I would recommend that if your VAT recovery is significantly higher or significantly lower, double check your position according to HMRC's guidance. If you want to give us a call, we can probably do it pretty quickly over the phone and just tell you whether we think you need to contact HMRC or you can just put it down with a note against your annual adjustment. Okay, so COVID affected calculations definitely worth looking at this year. There are things you can do to improve the recovery of VAT. The basic one is increasing the amount of taxable activities you have. That usually works. If you've got a number of companies and they're not part of what they call a VAT group under the same VAT registration, it's worth thinking about that, especially if you've got a charity and a trading sub. Normally you'll find the trading subs have got taxable activities, and by bringing them into the same registration as the charity's VAT recovery will go up. So think about that. Think about the impact of COVID. Think about the guidance I've just mentioned. Think about your annual adjustments and think ahead to making those annual adjustments. If you have got museums, galleries, anything with a kind of an admission policy on it, think about section 40, section 33 or section 41. Basically, what that means is that you can be classified in the same way as a local authority or a government body if you meet certain conditions. And if you do that, your partial exemption, the minimus limit, is far higher than £7,500. And equally, if you've got free of charge activities, you get to recover all of the VAT on the free of charge activities. So if you have got public facing activities, if you've got admissions that are free of charge to say museums or galleries, that sort of idea, give us a call and we can maybe see if you can get you registered or acknowledged under section 33 or section 41. So that's a whistle stop over the recovery of VAT. Was there any questions, Tracey, on recovery of VAT?
No, nothing up to now.
Good, right. Okay, so we're into the kind of the final section, and it's all about savings. And I've written there savings factor fiction. I mean, I think as I've highlighted before, VAT on expenditure in the main is a cost to the vast majority of charities. There are significant administration and compliance costs to think about, and it's a cost because to some extent the recovery of VAT is going to be restricted. So one surefire way of making a VAT saving is either to avoid paying VAT on the purchases that you make, or to think about kind of other ways of reducing the cost of VAT. So we're going to kind of look at those. We're going to cover those in just a little bit of detail just now, if that's okay. So things like you can make savings if you're a charity on land and property transactions by actually removing the VAT costs. I'll explain that, and I will explain each of these in a few seconds. So with land and property, you can remove VAT from the expenditure. Core purchases, again, you can pay 0 or 5% on expenditure, and that will reduce your VAT costs. If you've got medical related purchases, again, you can get those 0 rated, so you don't have to pay VAT, you don't incur the costs. If you can make exempt, or if you make exempt supplies, you want to try and increase the amount of VATable income that you receive. So things like the education I mentioned before, the cultural exemption, the land and property, if you change those from being exempt into standard or taxable supplies, you may end up getting a far better VAT recovery. Let me just kind of touch on the land and property transactions. So things that are 0 rated, the construction of new dwellings, the construction of relevant residential accommodation, so that's like old people's homes, that sort of idea. The construction of a relevant charitable building, so that would be a building that's used by a charity for non-business or free of charge activities. And similarly, village halls can all be constructed 0 rated, so the builder would not charge VAT on the building works and when they build those properties. Conditions have to be met. You need to be sure that you're ticking all the boxes, but well worth bearing in mind. The village hall one's a very interesting one because a rugby club, Caithness Rugby Club, won a case recently, and they were constructing a community building. It was the rugby club building. It was for rugby club use. However, it was used by loads of other, like the hockey club, the cricket club, the tennis club. It was used by the mother and toddlers group. It was used by an old people's group. It was used by the school. So it was used as a genuine village hall, but in a new style and a new kind of capacity. And they argued that the old village hall idea was outdated and they should get 0 rating on the construction of their building, given its purpose, given its use. And that was given its blessing and they got 0 rating. So look at the use of the building that you've got, and who knows, by just tweaking it a little bit more, making it a bit more inclusive, you might be able to 0 rate what you're doing. The renovations, there's lots of discussion over the renovation and conversion of buildings and people saying, oh, there's reduced rate VAT on that. There's 5% reduced rate VAT on the renovation and conversion of buildings into dwellings, only into dwellings. So if you're going to be converting a property into a shop or into I don't know, a kind of a charitable property, you might not get the 5%, but if it's for dwellings, you will. The last point I mentioned there is what I touched on before. If you're about to rent a commercial property and the landlord says, oh, we're going to charge VAT, if it's going to be used for free of charge activities, you can get that VAT free. Now, even if the landlord doesn't want to give it to you VAT free, because that would affect his VAT recovery position, you may be able to negotiate a reduction in the rent. What we've seen some people say is, well, look, okay, we're not going to remove the VAT charge, but instead of charging you 20% on the rent, we'll maybe meet you halfway, and the rent will be X pounds plus a 10% uplift. You then have an extra 10% cost, and so does the landlord, but you're meeting in the middle and you're both getting what you want. So think about that. Core purchases.
Scott, can I just, there's a couple of questions on land and property before you move on.
Okay.
For builders not to charge VAT on a community building, does the charity have to be VAT registered?
No, that doesn't, but it has to issue a VAT certificate, and the VAT certificate qualifies the use of the building. Now, again, it's back to this point I was mentioning before. The building has to be used for eligible charitable purposes, and it's all within the certificate. Builders are notoriously bad at flagging up VAT savings, and because for them, they want to keep it as simple as possible. And if they don't charge the correct rate, the starting point is that they're liable for any error that's made. So that's why you get a lot of builders that just kind of play a really safe bet and charge 20%. So if you're building something that's community-based, that's going to be owned by a charity that has charitable purpose, please give us a call. Please. That's why you've got your free of charge helpline, and we can tell you pretty quickly whether we think it's valid or not. You don't have to be VAT registered, but you do have to issue a VAT certificate for eligible construction works, and that's what the builder needs before he can do anything with his building works.
Okay, and I think you may have answered this one about the rental. Stephen's asked, can you insist that the property landlords remove VAT from rental charges, i.e. are they allowed to charge you VAT if you're a charity? So it was about negotiation, wasn't it?
Yeah, it is about negotiation. You can insist, yes, but equally the property owner can turn around and just walk away from the deal if they don't like it. So you just got to be pretty careful in how you do that. I think, what I would suggest is that if you know that you're going to use a property for free of charge activities, then go back to the landlord and say, look, we're a charity, we are using it for qualifying use, and I can give you kind of chapter and verse on that, give you a wee paragraph you can send over if you want it, and then ask them, how they feel about that. Some developers, some owners might be quite happy to say that's fine, we're not going to charge you that. Others might say, well, hold on, that gives me a problem, because remember that capital goods scheme thing I told you about before. They will have recovered all their VAT on the construction of the building or the renovation of the building. And it may mean that they have to pay a chunk of money back to HMRC if they don't charge VAT and the rent to you. So that's where the negotiation comes in. What you can say to them is, well, look, strictly speaking, we're a charity for non-business purposes, it shouldn't be really VAT on it. If that's going to create a problem, is there a negotiation here? Can we want the building, but we don't want to pay the full amount? What are you willing to do for us? And that's when you maybe negotiate the price. Go gently if you want the building. If you've got a few options and you want to play one off against the other, you might be a bit more gung-ho. I don't know.
Yeah.
Okay,
we've got about 7 minutes left, so I'm going to let you get on now, Scott.
Cool, that's good. Thank you. Right. Okay. So core purchases. I would always recommend that when you're looking at a purchase, double check that the correct VAT liability is being applied. If you, strictly speaking, if you pay VAT and you shouldn't, you won't be allowed to recover any of it because it's been charged in error. It's completely wrong. And if you've been charged at say 20% and it should have been 5%, again, you've been charged over by 15%. Now that's not good for you, but equally you can't recover any of that 15% because it's not been charged correctly. So remember, fuel and power, if you're using it for charitable use or it's low metered usage, you should be getting it at 5%. When I say charitable use, I mean, again, free of charge activities. But in this one, if you can show that at least 60% of your fuel and power is for free of charge activities, the whole bill is liable to 5%. If, however, it's not, so say you've got 40% is kind of free of charge activities, you should get 5% on the 40, and then you'll be paying 20% on the remainder, which you can recover some of. Advertising in any medium, as long as it's advertising on a third-party medium, should be zero rated. But again, you might have to issue a certificate to get that. Look out for staff secondments. Staff secondments by you for a payment will be liable to VAT. So I know you don't pay VAT on wages and salaries, and that's the cost of providing the staff secondment to you. And if you recharge those costs over, because the person is employed by you, you're making a supply of staff. That supply of staff is VATable. You need to think about charging VAT on it. Similarly, if you're not VAT registered, that counts towards your VAT registration threshold. Okay. And if you're receiving staff secondments and you don't want to pay the VAT, joint contract of employment or having a look at the services themselves. If the services themselves can be classified, for example, in care and welfare work, if it's regarded as a provision of care and welfare services or medical services, it might not be VATable. Supplies between connected parties. Again, if you've got a connected parties, you've got to think about the valuation of it. If the recipient of the supply cannot recover all their VAT, you need to think about open market value. If they can recover their VAT, you don't need to worry about the valuation of it. Similarly, if there's a huge cost on the intercompany supplies, look at VAT grouping. See if you can put both companies, associated companies, under the same VAT number, and that way you won't have any VAT charge at all. And you might actually get an extra benefit, because if you've got taxable activities in one and not so much taxable in the other, you might get a higher recovery overall when you merge them and blend them both together. Okay, so that's core purchases. Just to give you an idea, things that are zero rated for zero rated purchases. I mentioned medical goods, but things that are definitely zero rated that you might need a certificate for, but you shouldn't be paying VAT on. So disabled aids and goods for disabled people, medical, veterinary, scientific equipment, ingredients for medicines, drugs, chemicals for medical, veterinary pet purposes, vehicles designed or adapted for disability, so your vans, your buses, ambulances, training models for resuscitation purposes, the lifeboats, the rescue equipment, and talking books and newspapers should all be zero rated off the bat. I've got to say that there's often quite a big play made by HMRC on, oh, charities have got loads of concessions. That's really all the concessions you've got. In my book, it's not as wide as it should be. If I was chancellor for a day, you'd have a lot more. So that might be my next career. You never know. And that's it. That's me at the end of the chat with 3 minutes to go.
Well done, Scott. I'm impressed. We've got 2 questions outstanding from Stephen. Going back to the one on fuel and power, is it just a case of informing the supplier that you're a charity to get the reduced rate? You don't have to contact HMRC? No,
it's definitely the charity. So and the good thing on this one is if you've been paying 20%, you can go back for 4 years. Okay. Now, if you've been paying 20% VAT, you'll also be paying climate change levy on top. Now, if you've got 5% VAT, obviously it's a lot less, 15% less VAT for a start. And if you've already paid that, you'll be due to get a refund back from the power supplier, not from HMRC, but from the power supplier. But they will also give you a rebate of the climate change levy as well. So well worth looking at, definitely. And again, we found a lot of charities doing it, and we found a lot of the 99% of the power companies that we've dealt with have had no issue with it at all. They've been more than happy to accept. You have to give them a statement, and you have to tell them why your activities are non-business and what sort of percentage they are. Again, we can help you with that if you need that sort of statement, that sign off. But once you've given them that, you explain to them that you want it for the last 4 years. And if you've used different power suppliers, the same letter sent to different power suppliers should give you a refund for the last 4 years.
Great, thanks. We've got 1 minute left, so I'm going to ask one more question from Stephen. Sale of donated goods, how does VAT apply to that?
So if they're genuinely donated goods, I've got my table and my furniture that I don't need anymore. I pass them on to the charity. The charity accepts them, and the charity sells them. And I sign off my form that says I'm quite happy for the charity to keep all the proceeds of those sales. With all that in place, the sale for VAT purposes is recorded as being zero rated. So whatever money comes in for the chair and the table and all the other bits and pieces, no VAT needs to be accounted for on it. However, it's zero rated, so it counts towards registration threshold. It's zero rated, so it means that the VAT on the expenditure for the shop is recoverable. And so if you've got heat, light, power for that shop, repairs for that shop, and that's all you're doing, selling donated goods, you get all your VAT back on that shop under direct attribution. It doesn't form any of the pot or the general overheads. You get full recovery of all of that expenditure. And the other thing on it is that, as I'm sure you'll be aware, is if all the paperwork signed off, there should be gift aid on that donation as well. So not only are you getting the income, which is VAT free, you're getting 25% added onto it because of gift aid.
Great. Thank you very much, Scott. You've certainly packed a lot into that hour. I do appreciate it, and I'm sure everybody that's been on the webinar do as well. If there is any outstanding questions that anyone's got, do look on our website for all the way to contact the tax and VAT helpline. And just leaves to me to thank Scott again and to you all for attending. Thank you very much.
Thanks,
Bye-bye.
everyone. Thank you very much.